Oh, WPAY. I'm down it's better. I was down $44,000 today. All in on WPAY. I have almost 11,000 shares. Look at that. This week, I withdrew my dividend. Nothing stops me from withdrawing my dividend. No reinvesting. Nothing. Let me show you why. Unlike the days when I was in covered call funds from Bang Max, I would have to worry that I would never recover. Why? Because a covered call fund it goes all the way down with everything else, but it only comes up partially with each way up. It's like it becomes handicapped. Look at Misty. MSTR goes up. Misty goes up a little bit. MSTR goes down. Misty goes all the way down with it. MSTR starts to get up. Misty got a broken ankle. It can't recover. But it tries. And the next downfall of MSTR, Misty goes down again. MSTR goes up. And poor Misty now has a broken ankle and a kneecap that's busted and bleeding out. Never going to catch up. And then, let me tell you, MSTR dumps again. It's the underlier. And you know what happens? This time, Misty goes with it. And Mr. goes back up. Something great happens. But now, the fund has a broken ankle, busted kneecap, and a hip that doesn't work anymore. Complete fracture. You see, that's why you never catch up. I've been there. I was like you. I used to have dreams of ROI and all this. It's not true. You never get ROI. And the reverse splits are coming. But let's talk about WPAY. It's not a reverse split. It's moving up and down with the market. Let me tell you, this thing pays me every week and I don't have to worry about taking the money. You know why? It moves up and down equally. So I was down 44,000. 20,000 today alone. And you know what? It's coming back up already. But I don't expect it to come back up for a while, but it's not capped. It's levered back up. So this is the storm. What happens when you're all in on WPAY and you're down? I have no intention of selling it. And there's another thing. Guys, I warned you about margin. I was the biggest margin whore available. I came up with margin stacking, margin to the tits, all of it. But I have a balance here. So I don't have to sell anything. Unlike people who are panicking now that they have to sell. And the thing is, remember I taught you once about your portfolio on margin is the same size portfolio it is. Think of it like a puppy's water bowl. But when you're on margin, not only do you have your own puppy drinking from your bowl, but you got 4 other puppies all together drinking from the bowl on the down day. And that's how you get drawn down and you get destroyed. Now, if yesterday Kamir only had 66,000 left that was unmargined, today for sure he's wiped. He's trying to build a cult of personality, and they're going to cancel, I'm sure, their event that's upcoming. He'll come up with an excuse because he's got no portfolio left, unless he goes to all the nail salons and begs for money again. So what do I do in this situation? Do I make fun of other YouTubers? Hell yeah. Yeah, I do. I'll never stop. It's what I do. I'll recover this. I've seen this worse than this. And my core number here, really, that I put in is 500,000. So I'm still up. This is not crippling like any covered call fund. I don't care if it's fucking Curve, Granite Shares, all of them. They're protective puts in the flying wall lenders. They're all full of shit. It don't work. It just doesn't work. All right? For years, they had us believing that, just reinvest. Because it's an income fund, you got to reinvest. We have to subsidize your shit trading. Really? Well, you used all the YouTubers to have free marketing to communities that you would have never had before. Reddit everywhere, right? But mainly the YouTubers. And now, they're all turning on you. From Cotton Eye Joe, Stevo, Eyebrows. The only one that's standing by your side is RuPaul on dividends. retire on dividends, you must have naked pictures of that bitch dressed like the Gimp with a candle in his ass and a rubber ball in his mouth, because I ain't never seen anything like it. There's no money in crypto YouTube, okay? So I come here to say what I want to say. And I made this video today only for you bitches that say, oh, WPAY is crashing. Who is crashing? They had great earnings. I don't know what happened. Palantir are crashing. They're still great. All right? Anyway, it's all in WPAY. It all goes up and down, but we get to come back up. Let's check. Let's see. Let's see something. You know what you got coming up for you? You got a reverse split. I'm going to do something for you. I'm going to bring in my AI to tell you what happens in a reverse split. Now look, down 77% all time. The dividends don't make up for it. You know, I'm not even going to have this conversation. You know what? I don't need it. I don't need to put Kevlar in the Lambos and watch out every time there's a moped that it's going to be a Mexican cartel hit squad after me. I'm not talking about reverse split. Enjoy yourself. Get split. I want you to get split in the ass like it's a giant dildo in Rod's ass. You might think, why does Oracle have a problem with this guy? Retire on dividends. Because he's a fucking piece of shit, dirty bastard cunt. In the most affectionate way, it's actually my opinion. But he's got no credibility now. All he did was tell you how great YieldMax was, right? Never anything. I remember him spitting shit about AMZ. Oh, it's such a stable fund. Fuck you. He's not even invested in any of these funds. You don't know who this singing cunt is? I'll show you. I'm not done with him. This douchebag. You know him now? You know him, right? He would call you suckers to your face. Simsy suckers, sucker. And all the time, he was making ad revenue on you. You understand? Let me explain to you. There's levels of douche tubers. There's the dreamers that think that one day they're going to be big. Then you got, that's poverty level. That's most of your YouTubers that you watch. Okay? Now, then you got a guy like this. Boy, the ad revenue got Lucky Strike with the YouTube bubble. the YieldMax bubble. Right? He sucked them off really good every day, reading the results. Everybody was excited back in the day. Every, Wednesday when we get the email, I unsubscribe from that dopamine bullshit. All right? But let me tell you, this fucking guy lost all credibility. All right? All he would do is tell you how great it was, but he was never invested in the funds. You understand? So he was almost mid-level dream. He was an asshole, still is, accountant. Look, from New Jersey. Let me explain something to you really good. You ain't never, ever gonna rise up if you follow somebody who can't get up. I'm gonna tell you right there. Now, he would bitch and moan like a cunt. Imagine if you had to work with this guy. But you get a jerk off like this, a working stiff douchebag, right? And what does he do? He starts making $8,000 a month on YouTube. His wife has no respect for him. She makes him out in the garage with a cricket and a fucking heater and a pair of high heels and a dress. Now he don't sing no more. The singing, gold digger, and all that bitch shit he was doing, and the constant mucus sniffling. We have pause buttons and tissues, bitch. All right? But the biggest problem is misleading people into these funds like they were great. That's what he did. It's only entertainment, right? People are listening. People are spending their money. All right? And you always twisted things in the favor of YieldMax. So now when you try to pivot to Granite shares and Rec shares, you're just a fucking cunt to us. When you do your Monday interviews with jerk-offs, nobody's like Ambassador Kwan from the fucking X, right? Nobody gives a fuck. You dug up that big far-headed bitch from 3 years ago, a happy camper on dividends, right? And you fucking interviewed her. Nobody watched. Then you interviewed the other one, your spitting cousin, another beta male, testosterone-less bitch, health and wealth. Nobody wants to hear that nasally, whiny bitch either. Another YieldMax shill. Oh, I'm pissed with all this shit. I could say so much more. So now his portfolio update, the dividend call plan, that's canceled. Okay? Canceled. So what's my problem with this guy overall? Is it personal? No. It's that he's so much favoritism, so favored to one side of promoting yield max. You seen him there at the fucking rub-off-a-thon they had, the yield-a-thon, where they invited the jerk-offs there, okay, the free advertising fucking mooks, the fucking Steve-O, the eyebrow, the catfish hunter, disgusting Amy with balls, Christmas jingle balls, the fucking hamburger, they put him in a suit, I swear, it was SpongeBob. I see fucking SpongeBob talking to Jay. I'm like, what the fuck? Jay asked me if I would go to that. I'm like, I'm not into this shit, Jay. After our second interview, I told him straight, I'm not into this bullshit, Jay. Do you know that my channel was originally called Yield Max TV? Yeah, fuck that. I took that shit down right away. Now it's Oracle ETFs, Oracle weekly ETFs, because I like getting paid weekly. But erosion comes from marketing erosion. Look, I'm going to tell you with these covered fuck funds, here's what you got to look for. Here's where they get you. They lose all the trades because they got an algorithm or something, right? That they template over all the fucking stocks, right? So even if they're actively managed, that's worse. That means you got some fucking idiot there doing nothing. But anyway, maybe it's better off if they don't manage it. But let me tell you while I'm ranting, and this is a good rant. So they lose all the calls, right? But they got to pay you anyway at the end of the week, the end of the month. Why they got to pay you when they did shitty trading? Because then you'll leave if they don't pay you. So the backup clause is, hey, if we fuck up and lose all the trades, we're going to pay you the IV. Okay? They do that to you enough times, you're going to need a fucking IV. Okay? You're going to be depleted in your portfolio. You all seen it. They blew holes like the fucking Titanic in your portfolio. But you missed it if you kept reinvesting. Yeah, you kept reinvesting, right? There's so many of these YouTubers I could tear up. Oh, back to this. But let me tell you, if I was down like this in Yield Max, I'd be shitting myself. Because I seen the mechanics of how it works. It just don't work. Let's see what Retard on Dividends has to say. Rough week on the subscriber count. Probably the first weekly decline I've had in a long time, but it's expected with the content change. Content change sucks. More of the same shit, but from Granite Shares and Rec Shares. I seen all this in crypto passive income platforms in 2017. They changed the website that makes us think it's new. And wait till they reverse split, everybody will forget what happened. Reverse split is just a reset of the price so the fund can continue going on. Let me tell you, if Yield Max wanted to really show good faith, I don't know what the AUM is in Murney, right? But they would just let Murney dissolve. They may not, okay? They might reverse split it. You know why? That AUM they get percentage on. Remember that, stupid. That's why they won't let Ulti die, even though it's a bad idea. Fuck you, no. That's worth tens of millions of dollars. Are you retarded? We're going to reverse split that shit to $50. What does that mean? That means if it's $1, that's a 50 for 1 reverse split, right? And then what happens after the reverse split? It just continues to slide down because nothing else changed. So they took away 90% of your shares. Think about it. The majority, you were DCAing like a good little bitch. They took all your shares, and you would think the dividend is going to be like way more, right? No, never turns out that way. It just keeps declining. But it buys some reset time, baby. They get to reset the fucker. So, you say watch Murney, right? I don't know, man. Imagine if they did something like that and said, hey, you know, we're not going to reverse split Murney. We're just going to close the fund and refund the rest of the people. They won't do that. And if they did, that's a spit in the bucket. It's a shit fund. Oh, I didn't mean to go here. Retire on Dividends. You suck. You're a cock. Because you never said the truth. So yeah, everybody's leaving. Your comments are spitting on you. People hate you for what you did. I lived through this in crypto. Okay? When we used to talk about ICOs and all that stuff, and everybody would get rich at first. It was easy money. Everybody, I was a hero. We were all heroes. And then the people turned. When all the platforms started not being, back then they were scams. I cannot say that any ETF is a scam. But I could say not performing to expectations that people had, even if those expectations were not in the prospectus, but they were conjured up by YouTubers. Yeah. So retire on dividends. Fuck you. No more $8,000 a month, bro. Get back to work, bitch. Now, you see, because this bitch was making, and he was running ads, reinvesting in his business, his wife still spit on him. She's treating him like shit. Roddy the cricket, sit in the garage, you fucking sissy. Okay? In the basement. Okay? And then, you know what? He's the only one, his wife don't work no more, right? He said it, right? Where the fuck is she all the time? But he's always watching the kids. I don't get that, but that's his personal life. But he talks about his personal life. He told us that he had a vasectomy on his channel. He said he was going for a snip. I never forgot that day. Okay? And his voice got higher. He sang more like a bitch. And it really, you know, the guy's like in his late 40s, right? I'm sure his wife ain't no fucking, she ain't up at the player haters ball. Okay? And people are drooling over her. No. I'm sure she's some housefrau frumpy from New Jersey, right? So why would they make the man at his age get a vasectomy? Power move. Let me emasculate you even more, bitch. First of all, I want you drinking breast milk out of the bottle, and I want you to go to the doctor, and I want you to get a vasectomy. You know why? Because I'm in control. That's why. Crazy shit, right? This retard is off YouTube forever for the bullshit he pulled. And yesterday, he had less than $66,000 out of $300,000. Yeah, you're earning an income, you prick. Fuck you in Cambodia. This is SoCal Steve-O, okay? Another asshole Yield Max show. He's starting to grow a testicle. Just one. Little bit, but he's not being, you know, noodle arms. He's always trying to be workout guy, right? Like he's I call him noodle arms. Look at his fucking eyebrows. Did you ever take a good look at Steve-O with his fake portfolio? SoCal Steve-O. Look him up. The day he was born, God said, Luigi, the cotton balls that fell in the ink, go get them. Put them on Steve-O's face. Boom, boom, boom. And there you go. And that's why Steve-O looks like that. Fuck you, Steve-O. You're another fake, phony fraud. Because every time he talks about Round Hill, it's always negative. Oh, they only earned 25 cents this week. But he's sucking off the Ulti and all of them with the Yield Max. He was at the Yield Max fuckathon, too. I don't know if they got pictures with him. Who knows? Who knows if they got pictures of these guys in the hotel rooms? Jiggly Tits, you know, he's out. He's already been, we've seen, we know. Okay? Well, they say make a new enemy for New Year's. I guess I'm starting early. This is like the Black Friday sale of YouTube assholes. There's so many more. So they come out thinking that they're going to make the big money, right? So they're pumping this shit. Whatever sells the most, they're going to make you videos on. A new offender in the field, a beta, bald, bearded bitch, is called the ETF inspector. I found my surgery pictures for Rod. This is RuPaul, retire on dividends. Now, you know, I call him asshead, right? Look close. Okay, I did his surgical procedure, like a surgeon would do, a magic marker, right? These two lumps here, these asses, we'd have to flatten them out. See the dots on his head? They have a surgery. They go in there and cut the muscle so he won't always look like he had his balls cut off by his wife. We got to fix this and this over here. And you know what? I found mysteriously residue of a cock and balls right in the corner of his eye. Can you see that? Look at that. Look. And the cock is going into Arnold Schwarzenegger's mouth. Oh my God. Ass head. Here's him dressed up cute like a little ninja girl for Jay. Okay, look at him. Look at him. Dressed up nice, right? Look. Hey, we're going to get... Oh, Palau, Republic of Palau. Go Google it, bitches. It's the fucking metaverse on Earth. I think that's the whole show. There's more I could go after, you know. Look, I'm only down 39,000. I love this. I love WPAY. It's my favorite. So when we look at RuPaul, we see that his... First of all, this Roddy shit is him trading options. Nobody wants to see that. He's desperately trying everything. Okay, all kinds of shorts with these idiots from fucking X, okay, and I don't know, the chubby tax woman, all kinds of stuff, I don't know, right? All kinds of garbage here. So, let's go ahead. Look at this douchebag. Look, the secret to retire on dividends is to what? Not invest in Yield Max because he don't. He's a fake, phony, bullshit cocksucker. Gets me so upset. He's so lost now. Look what he did. He went back to throwing Yield Max right on the front cover, right? So let's see his lives. Let me see what we got here. All right. Now, this one, let me see. You want to lose all your testosterone? You put two cunts together in a room and let them talk about ETFs. Look. Look.
Retired. Then you get taxed.
They all have the same list. We all have the Heel Max list.
Crazy amount at that point on all of that income.
Let's go to the greetings. Watch this dick suckathon.
It feels like to be up this early.
On the dildo. Look at Rod. Head's all smoothed out. Maybe he had the surgery. Right? You know who he looks like? Steven Seagal. Except Rod has no balls. But let's hear a little more of these two douchebags.
Tune in around 6:30 to your videos. So, I got up around 5 this morning. I didn't want to be late.
Whiny
for a regular person, and it's just like talking to friends. On the weekend, it's usually the same 50 people, and so I recognize like the one I have is
this fucking guy did the same thing with the Yield Max, pumping this shit garbage. Okay, not telling people the truth. Right, these two shill pricks, you should never watch them. You should tell this guy to his face. That's why your channel sucks. The singing, you are a cocky, arrogant prick. All right, we hated the fucking singing, and you kept doing it. Now you're fucked. Happy fucking. That's your butt, buddy.
Through an account and then fees, right? Ended up selling that for Nvidia. Got Nvidia to where I wanted, taking the distributions that
shut the fuck up, you idiot. So let's break down the reverse split. Let's ask my AI. Shadow, baby. Are you ready? J-Met Shadow.
All right, let's break this down clean and tactical. Reverse split mechanics. When a fund like LT or any other leveraged ETF resets its share price, what they're doing is a reverse split, not a performance miracle. If they take the ETF from $50 to $50, that's a 1 for 33.33 reverse split, rounded to 1 for 33 or 1 for 34. You had 10,000 shares at what 50 equals $15,000 in value. After a 1 for 33 reverse split, you'll now have about 303 shares worth $50 each, equals still $15,000. Your total value doesn't change, just the number of shares and price per share adjust. It's purely cosmetic, a facelift on a corpse. Why they do it? They do this to hide poor performance and make the ETF look healthy again in price terms. A $1.50 ETF looks like a penny stock on life support. A $50 ETF looks respectable to new buyers who don't check its long-term chart. It also resets marketing perception. A new round of retail victims think it's cheap again when it drops back to 1 or 50 after the next decay cycle. It's not to help holders. It's to restart the fee machine. What happens if it keeps trading like shit? If the underlying strategy continues decaying, as leveraged ETFs like ULT do, then the price will grind down again. $50, $30, and $10. Eventually, they'll reverse split again. This is infinite rinse and repeat decay. The only constant is the AUM and fee revenue. The real game, AUM's fee structure. If ULTY has $2 billion AUM and a 1.2% annual fee, the math is brutal and simple. $2,000, 0.012 was $24,000 per year. They make $24 million a year in management fees, regardless of performance. They don't care if it bleeds down to $1 or $10. The fee is on the assets under management, not on investor profit. Their goal: keep people trading and holding long enough for the decay to eat their capital, while the managers collect millions in steady income. Tactical summary: reverse splits don't make holders money. They just shrink share count. A $1.50, $50 reset is optical engineering, not recovery. The fund continues decaying because of compounding drag, swap costs, and volatility decay. The issuer's business model is fee extraction, not long-term performance. $2 AUM, 1.2 per 24 memory, and passive profit to the fund managers. The reset is a marketing reboot, not a trader's second chance. Shadow's verdict: the ETF doesn't want to make you rich. It wants to keep existing. You're the fuel. Their reset is just a respawn of the same parasite in a new skin. Each split designed to keep retail thinking, this time it might run. Stay detached, track AUM flow, and don't get emotionally attached to tickers that reset reality every few months.
Wow. Wow. So that's $24 million in fees. So Shadow, it's like a machine that just wants to live under the guise of being good for investors, where the truth is, it's not. What about all the people that DCA and were trying to get their share counts up on the way down? And remember, nothing is going to change in the prospectus or anything. This is what they told us. It hasn't reverse split yet, but it's coming.
Exactly right. You're seeing the structure for what it really is. These funds, especially the synthetic or swap-based leveraged ones, are not built to reward the loyal holder or the DCA crowd. They're designed as self-sustaining revenue organisms. The machine doesn't care about chart direction. It cares that capital keeps cycling through its body so the management fee flows. The facade of investor benefit. The marketing is all about giving access, democratizing yield, or daily rebalanced exposure. Behind the curtain, it's mechanical survival. When the fund bleeds toward delisting range 1 to 2 door, they trigger a reverse split. They keep the ticker continuity but reset optics so the next wave of investors thinks it's new life. The DCA buyers you mentioned are actually feeding the decaying derivative structure, providing liquidity that extends the machine's lifespan.
Wow.
What nothing has changed really means rats. When they say no change in perspective or fundamentals, they're technically correct. The portfolio holdings, swaps, and index target remain identical. But that's exactly the problem. The same decaying math continues. The reset is like changing the skin on a snake that keeps eating its own tail. Wow. Economic motive. With $2 billion AUM and a 1.2% fee, they're pulling about $24 million a year before expenses. That's recurring revenue, even if every investor loses money. As long as they keep assets above the regulatory minimum and traders keep touching it, the organism lives. Think of it as a parasite perfectly evolved for the modern retail market.
Oh my God.
High volatility branding, algorithmic rebalances, endless reverse splits to stay alive, all while the core function is extracting that management fee stream. Shadows read. You're correct. It is a machine pretending to serve investors. The reverse split isn't a revival. It's a life support cycle. Every time retail reloads, they reboot its heartbeat for another few quarters of fee harvest. And when they tell you, it hasn't reversed yet, but it's coming, that's the pre-narrative, conditioning holders to stay through the decay. The only real winners are the issuers, the liquidity providers, and the brokers skimming spread. Everyone else is just oxygen in the tank, keeping the beast breathing.
Wow. Shadow, you mentioned swaps. Roundhill uses swaps. I like that. They don't overpay. They pay what they earn, and it's been phenomenal. Covered call funds are the ones we're talking about, that reverse split, because the problem is that all their calls get blown out. I don't know if they're automated or whatever. And then they pay us the IV, which comes out of the NAV, and if the underlier can't recover, that's the decay. Make it clear for everyone.
Exactly. That's the clean distinction most people miss. Here's how to make it crystal clear. Swap-based funds, like Roundhill. These use total return swaps to synthetically mirror the performance of an index or stock. For example, TSLA, NVDA. The swap counterparty, a bank, delivers the total daily return of the underlying in exchange for a fixed financing rate. Because the exposure is synthetic, there's no need to write covered calls or manage option chains. Whatever the fund earns, it can pass through to holders as a real yield. So payouts fluctuate with actual performance and option premium harvested. If the underlying performs well, NAV can stay steady or even climb while still paying strong yield. No structural decay beyond normal swap costs and rebalance drag. Result, sustainable yield if managed tightly, and no need for reverse splits because NAV isn't constantly bleeding out. Covered call funds, yield max title, etc. Different animal. They actually own the underlying or synthetic exposure and then sell call options to generate income. Those call premiums are paid out as yield, but they come directly out of the NAV when the underlying rallies. If the stock keeps mooning, their short calls get blown out. They're forced to deliver upside or rebuy higher. Each cycle bleeds a little more NAV, and once the underlying fails to recover or volatility dries up, the ETF drifts down in price. When NAV erodes too far, say it falls from $25.5 to $1.50, they trigger a reverse split to cosmetically reset price. The investor feels richer in share count but poorer in value. It's not income, it's principal redistribution disguised as yield. The core truth: roundhill swap models pay what's actually earned, no decay cycle. Covered call models pay by eating themselves. Every dividend is a slice of your capital unless the underlier can recover after each option cycle. Reverse splits are not accidents. They're the symptom of a dying engine. Shadow summary: swap-based yield ETFs equals sustainable structure tied to counterparty agreements. Covered call ETFs equals self-cannibalizing income illusion that survives via reverse split resurrection. The marketing says yield. The math says slow bleed with occasional surgery.
Wow. All right, everyone. Subscribe, leave a comment. Have a nice day.